to also hear from you, or to get some clarifications. We asked him a question. From his own response, he also needs some clarifications. So which is very, very important. Clarification is the hint thing here. May Allah guide us. I would like to go to Barrister Azeezat Adedoyin Aremu. We're talking about tax reform. And we know these reform proposal. Oh, it's fine. Oh, my God. It's about legal framework. I would like you to speak to the various legal frameworks that, one, backs the collection of tax from the people, okay, and the payment of tax by the people, and also the administration or the management of the commonwealth of the people. Okay. We can talk about we pay, you don't pay when you do that tax evasion, this and that. But I want you to concentrate more on those who will manage the revenue. So that those that are paying will not blame themselves. Why are we paying tax? And vis-a-vis the current Nigerian situation in terms of the way trust. Thank you.
Assalamu alaikum wa rahmatullahi wa barakatuh. Firstly, I would like to say it's a big privilege that I'm here in the presence of the distinguished. Thank you, Sheikh, for this honor. So my name is Aziza, and let me just breeze through because a lot has been said already. I'll start from the legal frameworks to tax reform in Nigeria. Now, basically, we all understand what tax is. Let me start from a layman perspective of what tax is. Let's see, tax is like, when we talk about tax reform, we are talking about the mode or the changes the government make to the way tax is collected. Now, let's see tax as a communal contribution that we all pay into a communal piggy bank that the government use in doing majority of things for us. Say infrastructures, good road, electricity, good public hospitals, and the likes. Now, when the government discover or decides or feels that maybe some people are not paying their own quota of the contribution into the piggy bank, or they feel that the management of the piggy bank is not as expected, they make some changes. These changes is what we call tax reform, basically. So now, when I go to, because of the time, I would like to go to the tax legal framework for tax reform in Nigeria. Because the legal framework is driven. Sorry, I'm not used to affairs, too much affairs on the seat, except my husband, so I would like to, so when we talk of tax reform, it's driven by constitutional provisions or the Finance Act. This Finance Act happens to be an annual thing. It's like an ongoing mechanism for tax reform in Nigeria. Then we have some sector-based laws. Now, I would like to, because everything has been said honestly, I'd just like to go briskly into the constitutional provisions now. The number one legal framework when it comes to tax reform in Nigeria is the Constitution of Nigeria, 1999 Constitution as amended. Now, when we talk about the 1999 Constitution, it serves as the source of tax reforms in Nigeria. Because if you go through the provision of Section 4, Sub 2 and 7 of the Constitution, it gives the sorry, I heard my brother and I had to, So it gives the legislatures, the Federal House of Assembly, the National Assembly and the State House of Assembly, it gives them the power to enact some laws, which includes tax laws. Now, if we look at Part 1 of our second schedule, that we talked about the exclusive legislative leads, it gives the federal government the exclusive power to enact laws as relates to federal laws. For instance, custom duties and the like, it is only the federal government that can do that. When we look at the second schedule of the Constitution that talks about the concurrent legislative list, it also talks about the powers given to both federal government and state government to enact laws within their jurisdiction of tax. Now, when we look at this, the implication is that the Constitution, being the ground norm, is like the number one source of tax in Nigeria. So whatever laws we would have in Nigeria as relate to tax or tax reform comes directly from the Constitution. That's number one. Now, number two, I would just like to mention three because of the time. We'll talk about the Finance Act. The Finance Act was introduced in 2019, and it's been an ongoing mechanism. Basically, what it does is, it looks at the situation of the economy. They look at a way they can, add to this to make life easier on people. Or, well, like Ustaz said, he said there's no way. We've actually been talking about the goodies of what the tax reform does. Now, when we talk about tax reform, in reality, we need to know that there's no way, because the major reason for tax reform is not just for revenue, this thing for the government. There's no way, it's like a two-edged sword. Ojumeti Loni. When the government make money from us, maybe due to one of the reforms or not, it affects us as individuals or as stakeholders, one way or the other. Now, let me briefly talk about who the stakeholders is. We talk about the government being the number one stakeholder. I said tax is like a contribution, a journey. Now, for every ajo, to manage it. Now, the manager of this contribution we are talking about is the government. Now, because our landa, and it's not just us, as individuals, we are stakeholders because under. As businesses or business owners, we are stakeholders because our landa. Foreign investors, they are stakeholders because one in one. So we need to understand this, that and as stakeholders, we have a right to one or two. So now when we talk about tax reform, because the major thing is not just about revenue, more revenue, we need to look at it from this perspective. Nigeria as an economy, we rely too much on the oil sector. Now, one of the purpose or one of the reasons the government do some tax reform sometimes is to, lessen the burden on the oil sector, so that when we have fluctuations in oil, the economy remains stable. So how did the government do this? They do this through tax reform. So let me just go back to the second legal framework. I was talking about the Finance Act of 2019, because it's an annual thing. We have of 2019, of 2020, 21, 22, 23, and I believe we have of 24, because it's an ongoing mechanism for tax reform. And it happens to be like the only direct law or act when it comes to tax reforms in Nigeria. These ones, for instance, that of 2019 increased the value-added tax from 5% to 7%, 7.5%. That's one of the implications. Now, when we look at the implication vis-a-vis the stakeholders, you know that I already told you that we have the government as one of the stakeholders, and we have we as individual and as business owners as other stakeholders. Now, the implication of the 7.5 VAT or 5% to 7.5 VAT. Now, the implication of the 5% to 7.5 increment in the VAT rate on the government part is an increment in the revenue allocation generation. Now, let's come to us as business owners. Because as of 2019, I believe that VAT was still, because based on what VAT entails, it's like a charge, like a tax on every taxable person, on taxable goods and services. Not now that they presume, according to what I just learned again from the professor, it's been removed on basic food. But as at that time, you pay consumption tax. When you buy some basics, some foods, you pay items. Now, when the tax was increased from 5% to 7.5%, let me give us a typical example of the implication. A bakery, that's the best example I can. Because tax was increased, and as bakeries, they pay VAT. Now, this automatically means that from their profit margin, there's a reduction. In order for the reduction not to really weigh on the business, and that's them as a stakeholder now, what happens is the bakery increases the price of bread. Now, thereby coming back to us as the final consumer. Now, this is the implication. As it's helping the government get more revenue, it's also coming back to us as the ordinary individual who are the final consumers and payers of VAT. So that's on that. Now, another thing, the 2019.
2 minutes more.
Okay, so I would like to. So another thing, the 2019 Financial Act they did was when they removed tax on any business that has an annual turnover of less than 25 million. Now, the implication on business is, when I'm not paying tax as a small business owner, it means that my profit margin automatically, whatever I make is my money. The government is not taking from it. The implication on an ordinary stakeholder is it encourages me, even people in the informal sector, they want to come, okay, let me register my business. After all, as a small or a starter business, the government is not taking from me. That's an implication. He encourages the people in the informal sector, you know, to want to put their company into a proper formal business. Now, when this is done, what happens is because the people who earn lower or the people whose business do not make a turnover of 25 million, it gives a greater burden on those who are making more. And it's just like Sheikh telling us now that, okay, for the Milad Rosulullah, everybody is going to contribute money for us to cook. That's a typical example. And then we all understand that the implication of all of us paying this money, whether you are making more or making less, is that the little we all contribute, we are going to have enough for the day. Now, if some people or Sheikh feels that, no, these people are not making up to what they should make, don't worry, you guys don't make it. The people that are earning more that I know, you guys have to pay this money. The implication of us on us is, even though we will do it because it's Sheikh, it will be, the burden will be greater on us because our lafeson and wanting one there's some ajembe. Now, you understand? So all of these things come into this thing vis-a-vis, you know, the legal framework, and those are what they do. I'm sorry, I just want to brush through the 2023. I had to jump a lot of things.
Okay.
Now, for the 2023, they make some reforms, some of which I found personally this thing. You know, I told you, one of the things they do with tax reforms is to generate revenue. Now, the 2023 Financial Act, what it did was they segmented the reforms into oil and gas, the ordinary employment, and some others. Now, under the oil and gas, because one of the reasons for reform, when they make some reform sometimes, they are trying to place strict compliance on us to do this. Now, what they did was, under the 2023 reform, they added like a 0.5% tax on every goods that comes imported into Nigeria for business outside of Africa. Now, to my understanding, what this is trying to do is encourage us and made in Nigerian products. We want to encourage these small business owners to do one or two. Because by the time you calculate what you have to buy, bringing money from China, paying another additional 0.5, okay, you feel like, why am I not buying it from Nigeria? Let me just do this, and you know. So basically, this is what tax reform does. And in some, you know, for the tax, for the petroleum sector, they decided to increase that anybody who is in the sector that does not pay their tax duties as are when due will now pay a minimum of 10 million naira for the first day of default. And for every subsequent day, you pay an additional 2 million naira for every subsequent day. That's them trying to force compliance. If you think of 10 million first day, then 2 million every other day, there's no way you will not want to pay that money.
Exactly.
Salam alaikum wa
rahmatullahi. We'll still come back to you. Thank you so much, Barrister. That is really, really thoughtful of you. And we get in there. Now, let me go to the third discussant now. And we have, so after his presentation,